Hi, my name is Reed Silverne. The name of this show is Fed Pride. The reason it's called Fed Pride is because I'm a federal worker and proud of it. This is live to tape, and by live to tape I mean that if I fall off the chair or have a terrible technical problem, which I intend to do today, you're going to see it. The only difference is that for me it's Friday. You're going to see it on Sunday or Tuesday. And that's just the way things are. I'm a federal worker, retired, but I'm also a federal worker rehired. And of course, I've been working all week. So during my retirement period, I had a lot of bells and whistles on my show. And unfortunately, those bells and whistles are now disappearing. So last week, I mentioned that I was going to go to Comic-Con, and I did. I had a great time. Comic-Con is the world convention of comic books, comic book art, and also movies that come from, and TV shows as well, that come from comic books. I took my pictures and I put them on stick drive, and I'm going to show a couple. However, just to warn you, I am having a technical difficulty in that the viewer that we happen to have shows these things at 4 times its normal size. So every time I bring one up, I'm going to have to click it down, and hopefully you'll still hear me speaking. I don't know. And usually I won't burden you with a slideshow, but this particular one is, of course, interesting to me, and therefore is going to be on my show. So I'm going to turn over here, look at the computer, and I'm going to turn off my title. I'm going to turn it me, and hopefully, if you can still hear me, here will be the pictures from the show. And this one here is from the Star Wars exhibit, and as you can see, some of these were statues, some of these were real. And I need to resize each image because this is a total pain in the tail. And there's the younger Anakin Skywalker over there. And let's see if I can go toward the end. Image. Of course, being half blind isn't helping either. And what these are, this was the Warner Brothers, I believe, exhibit. And there's the guy who didn't play, but who's pretending to be Indiana Jones, and is Indiana Jones's girlfriend. Okay. All right. I am probably going to have to not do this. So this isn't working too well. And here's all the comic books and the comic book art. There's another way to do this. Not very effective. People at random. Okay. Oh boy. All right, this is just turning into a techno disaster here. This, by the way, and I'm going to see if I can turn this around. This might be my last one. Let's see if I can work image. Rotate to the left. Up. Here. Take right. Rotate right again. This over here is one of my favorite artists. That's Olivia Bernardis, and she is used to draw for Playboy and other things. I got to meet her personally, and she's one of my favorite artists. Let's see if we can expand. See some of her art. It's not really working. Okay, this has been a complete failure. All right, back to my show. Sorry about that, everybody. But I had great pictures of people in costume, people doing different things, famous artists that I really, really like. And unfortunately, the technical problem was just too great for me to overcome. So this may be a complete disaster, but we'll just let it work the way it is. I'm going to talk about a few things today, and if I don't get to the other things, then I'll just talk about one main thing. And my first issue of the day, and I had mentioned that I was going to talk about it in some other talks, and that is a second derivative collapse, and those are called ARSs, and ARS is a adjustable rate securities, and what those are, again, they're fixed rate securities, or at least they're shown to be fixed rate, and they're muni bonds, they're student loans, and so on and so forth that are packaged, and then they're turned into bonds, of course, and then adjusted every single week or every single month. And I believe I've talked about these before. I'm going to put myself back in the picture. Just part of the charm and beauty of the non-professionalism of Fed Pride, and I'm proud of the non-professionalism of Fed Pride. So what these ARSs are is a bunch of banks came together. They approached the municipal bond industry, they approached the student loan industry, and they approached some other industries, and they said, we will give you easy credit, basically, because there were some problems in muni bonds and other municipalities and other instrumentalities in getting credit and issuing bonds. So they said that they would issue a bond, the rates would be adjusted periodically, either weekly or monthly, in an auction. So they're called auction rated securities. Around February, this started about a year and a half ago. It's all one of these new instruments, new banking instruments, new investment instruments that have just been a complete disaster, that are an outgrowth of the deregulation that occurred in 2000. That deregulation, still called the Commodities Modernization Act of 2000, that ruined the commodities business, helped destroy, at least temporarily, the credit worthiness of this economy by allowing mortgage derivatives. And of course, the mortgage derivatives created a market, basically, where they said, we will buy any mortgage, no matter how bad the credit of the person holding it is, and we will take this mortgage and we will package it, and then we will sell derivatives based on it, and the people that buy the derivatives will have none of the value of the mortgages whatsoever. They'll have a claim on the cash flow based on defaults. And of course, the default rate went up a little bit. These derivatives went to zero, and banks lost hundreds of billions of dollars, and they lost the ability to loan 20 times their losses, and that created the credit crunch which you've been suffering from. Then they put out these commodity-based derivatives, basically bonds, and I've been talking about that. And we even had the first default that I suspect may have come from the latest reduction or normalization in oil prices that went from 147 to 125, or in the low 120s in the last month or so. And there was a failure about a week after the first drop in a company called SEM Group, and I suspect that might be the first CCO loss over here. But now we have these auction rate securities. Now, the actual collapse of auction rate securities occurred about February of 2007. However, they knew that fewer and fewer people were getting into these auction rate securities, and that they were becoming illiquid as early as October and November of 2007. So what does that mean? That means that they go to the city of New York. They say, we will sell, we will loan you money, and based on a bond, and the bond will adjust its rate on a monthly basis based on this auction. Now, what happened was fewer and fewer of the new investors came into the auction, and the people who were running this auction, which is UBS, Swiss Bank, the UBS, you and us, that one that has all the ads. Merrill Lynch was in on this. It was a scam. It was another case of massive multi-billion, in this case $330 billion worth of fraud against the American investor, and that may or may not impact the overall economy. Basically, what they did is they took these bonds, they sold them, they bribed basically the brokerage houses, and they gave an increased commission to brokers that would sell their clients these particular bonds. Now, I know that I was approached with this, and I have to admit I got conned. And basically what they said was, these are muni bonds, they're tax-free, they're as good as cash, and every single week you make a decision whether you want to keep them or not, and if you get out of them, we pay you, and in the meantime, we pay you the interest rate that occurred from the auction. Well, that was a lie. Now, whether it was the broker himself who was given the lie, I suspect it was the banks who were lying to the brokerage houses, who were then selling these to investors, and then the ultimate result was a fraud. Now, what happened in February of 2008 was these things became what they called illiquid. And they knew that they were going to get illiquid for 3 months before that, and they were still calling up they have these phone calls with business reporters once a month, and they were still calling them up and saying, this is a great deal, and these are great things, and you should put your people in them, and for the financial press, you should tout these and encourage people to get into them. And I'm going to put my cursor on New York, where a lot of these things are done. UBS is out of Switzerland, which of course is right here. They basically were mostly Wall Street investment houses and banks. Merrill Lynch is one of the worst ones. And the worst of all was UBS that designed the auction in the first place. Now, what happened? What happened was, as these auctions kept on going up, in order to support this whole business, and also they still had the paper that were issued from the municipalities, from the student loans, and so on and so forth. So there's still some value in there somewhere. But instead of exchanging them for long-term paper or going back to the cities and saying, look, we're going to make these bonds into fixed-rate bonds, and then we're going to tell our people that these are fixed-rate bonds, or to buy out the investors, what they did is they closed the auction without any advance notice to the brokerage houses, who are still selling these turkeys to people. And I believe I bought my last one in January, the month before this thing collapsed. And it seemed like a good idea at the time because these were muni bonds. There's nothing in the world safer than muni bonds. And on top of that, they were muni bonds that you could sell every single week, and that you got a very high interest rate, 5.5%, when the regular treasuries, short-term treasuries, were more like 2%. Of course, too good to be true, and they ended up being. So basically, what's happening is in fact, there was another middleman there, because UBS would run the auction and set up the bonds with the issue the bonds that were that were loaned, or they're basically basis of loans to cities and student loans and so on and so forth. They'd issue the bonds, and they were bought by BlackRock and Van Kampen and some other ones, which were basically mutual funds, and then the mutual funds would sell those through the brokerages to the sucker investors. And basically everybody decided that the investor, the client, was a sucker, and he would be stuck with these things that he couldn't sell back. But in order to keep them from screaming too hard and having to say, you just lost $10,000, you just lost $25,000, what they said was, we'll just keep on paying you the interest, and we'll pretend like it's still alive. So that when you open up and you go into your investment portfolio, it still looks like you have full value on that particular thing. Naturally, everybody, and I'm saying the managers of UBS, the vice president of the UBS, the president of UBS, president of Merrill Lynch, all those people that didn't say and that didn't tell everybody the second they had figured it out that this new marketing tool, that this new investment vehicle was not going to work out, was committing a multi-billion-dollar fraud from that second on. Every single person he talked to, every single person they approached, everybody down the chain was committing felony fraud throughout the whole thing. And there have been suits. UBS just paid the state of Massachusetts $1 million fine out of what, 35. That was for $35 million of frauds against the municipalities of Massachusetts, and a massive fraud against the investors. There's a big case from the Attorney General of the state of New York, and you notice who's left out of this whole thing? Yeah, that's right. The federal government, who let this thing happen and who needs to go out there and start doing criminal indictments of everybody who is on the loop and who lied and who misled and who caused any investor, even the last investor, even the dumbest investor, to lose a penny in this market. As far as Massachusetts, the deal with Massachusetts was the Massachusetts holders of these crappy securities, they would be made whole by UBS. So I don't know if anybody in Arizona is doing anything. I kind of doubt it. But the bottom line is that everybody pretends that as long as the mutual fund or the bank or somebody keeps on paying the interest payments, that these things are live, normal securities, and that they have some value, and keeps them on the books so long as the ultimate client doesn't try to sell it. So the ultimate client's sitting there. He basically has a high interest savings account until somebody figures out what to do, and somebody has got to take this loss. Now, what I would like to see, and I'm going to be very, very blunt about it, I would like to see the executive chain of UBS, the executive chain of Merrill Lynch, the people who were behind it, and who very, very clearly, they have emails, they have conversations over the record between November and February that these things were in trouble, and still touted them. Anybody who was in the loop while these were still being touted during that 3-month period has got to be indicted for felony crimes. I'm not talking about minor crimes. I'm talking about if somebody goes in there with a gun and holds up a liquor store, he's going to get 25 to 50 years, and these guys have held up $330 billion worth of investors, held up, stolen their money, and are basically being hit with $1 million fine. That's ridiculous, and that is not right. If a mafia boss, who probably doesn't have as big a theft and a big a history of theft as these people do in this one minor instrument, it's really nothing compared to the mortgage derivative scandal, but it's still making people lose money and lose their life savings. basically, in a nutshell, we have what we call the RICO. And of course, these people have talked to each other within their companies, talked to each other between their companies, made deals with mutual funds, with brokers, and then sold them down to the dumb investee public, and they've gone down there and basically cheated, and continued to cheat even after they knew this thing wasn't going to work. They shouldn't have issued it. They may be on an experimental basis. They shouldn't have gone into a massive market for it till they knew whether it was going to work or not. But it didn't work, and it wasn't supposed to work. And the reason it didn't work is who is dumb enough, or what city is dumb enough to take on a bond and not know what the interest rate's going to be. If you know that you're going to issue out a bond, and you know that your city is going to have to pay 6%, well, the city has to pay 6%. You have to work that out into your city budget. But if you don't know what it's going to be because there's a new auction every week, the whole thing was kind of stupid and dumb in the first place. And I personally, of course, I got stung, but I didn't, lose my life savings. But I'm sure that thousands and thousands, possibly millions, have lost their life savings. And I also know that a lot of retirement funds bought into these turkeys, and that has reduced the value of retirements throughout the entire country and world. So these guys have got to get indicted. Now, even more so, we have what we call the RICO law, is that if two people conspire, two or more, to commit a crime, and obviously there's many, many people within these companies that have put this thing together and that knew that it was going down, and if there were at least two of them, then the companies and the individuals can and should have their assets seized. We have a law, it's called the RICO law, anti-racketeering law, and it basically says it's set up against kingpin who are stealing, of course, millions and millions and millions through the drug trade and through the rackets, through the gambling, illegal gambling, and so on and so forth. Well, basically, this is massive fraud. And consequently, the guy who called up the investment business reporters and said, this thing is going fine, this thing is going great, and lied between November and February. He had people that he was with. He was committing wire fraud by going over any electronic media to defraud, his wire fraud. And he was also committing conspiracy. Everybody in that company who knew about this was committing a conspiracy to fraud, and a conspiracy to fraud means that the money that you make is also tainted and dirty and can be seized. The individuals involved with this activity need to be indicted and need to be called to account under the RICO Act, and all of their assets, their mansions, their limousines, their vacation homes, they need to be seized, they need to be auctioned, and these people need to be treated exactly the same as drug dealers, because that's what they are. And they're worse because they're so respectable. And these people have stolen, and they are not treated like drug dealers. They are not treated like racketeers. They are not treated like mafia. And they get $1 million fine. And they get to promise, without actually even coming through and saying they're going to make these people whole, when they know that they have no intention to, that they are going to have to be beaten into it. Basically, all of their assets should be seized and should be used to pay off their people they've defrauded and the people they've cheated. That's what happened to Ken Lay and Skilling, the guys from Enron, and that needs to happen to the folks from UBS and Merrill Lynch who put together these ARS. It's a major, major, major fraud. The total value of all those ARS bonds is $330 billion. We don't know how much individuals have lost, but they've lost a lot. My name is Reed Silverne. The name of the show is Fed Pride. The reason it's called Fed Pride, I'm a federal worker and proud of it.